Hey guys, how you doing? So apologies, we are running a few minutes late. We have had, or I have had, where I am in Queensland, we've had a massive thunder and lightning storm. There's been massive hailstorms and stuff like that. So apologies, we're running a couple of minutes late. We think that that is the cause for a slight technical malfunction before we go on air, but we should be able to hear Mr. Demi loud and clear. Are you there, Andy?
Hi, mate. I'm here. I can hear you at the moment.
thank thank bleep for that. That's very good. That at least if I cut out, everybody will be able to hear you. So before we jump into the content, how have you been? How was your weekend?
Mate, it was fantastic. I think it reached its peak around 1:20 UK time when I saw Mo Salah score that unbelievable goal. That was
Wow,
it
if
for me.
that's
Just I just threw the pillows on the floor. That's how in awe I was.
okay,
But
well,
we did also have
we
a fantastic barbecue on Sunday, and we did a fish, the best you can get: sea bass, king prawns, uh, octopus, the whole lot. It was amazing. It was a nice little difference to the meat every week.
yeah, I was
So that
going to
was
say that
great.
you're a meat and two veg kind of guy normally, aren't you?
Yeah, I do like my meat. I've got to say, but yeah, we thought we'd change it up, and we had a fish feast.
Nice
Beautiful.
work, nice work. So look,
And
let's
yourself?
check
You good?
check in, mate. I do I look burnt to you? Because I feel I'm still
Yes,
like
you
Mr.
do, look,
Lobster.
man. You do. I was
I
going to
was at the
say you've
beach
been in the
yesterday.
sun.
Yeah. I was at the beach yesterday, and I got a little bit burnt, and had a little swim in the sea, and then now today it's been absolutely pinging down. So yeah, thank you for asking. I am good, but I am hot flushing it right now. So let's check in with some of the comments. Roy is in the house on Facebook. We've got Brucey in the house. Hello to the ant and deck of the trading world. I'm going to take that as a compliment. Do you have a preference who you would rather be, ant or deck, mate?
uh, no, I don't. You can
Fair
choose.
enough. Nah, it's okay. I don't mind. Anita's in the house as well. Good to have you with us. And we've got Con in the house as well. And then representing us live on YouTube is Yanis. And we got Slavic as well. So great to have you all with us. And if you're new, or if you're people are giving me abuse about the color of my skin, it, it does look a little bit nuclear. I'll give you that. It does look a little bit nuclear. So I'm going to have to try and turn this light down a little bit because it's looking like I feel like a Iron Man in that suit or something. I look pretty red. So look, if you're watching this live, thank you very much for joining us. If you're watching the replay, then also thank you for watching the replay. Today, we're going to jump into the content. In a minute or in a moment, we're going to talk about FX news and all the biggest FX news that's coming out this week. Then we're going to try and look for a swing trade setup in 15 minutes. If you're new to this show, then you probably don't know, but we kind of set Andy a bit of a challenge where he's got 15 minutes to find an FX trade, all live within the show, all live on the charts. So that doesn't change. That's going to carry on going again. But before that, we pick a topic to talk about. And today's topic is swing trading. So, Mr. Demi, please tell us, what is swing trading and what are some of the best ways to trade it?
Right, it's nothing dodgy before you get carried away. Swing trading, okay. But yeah, no, I think swing trading has many kinds of definitions, and essentially what you're trying to do, because a lot of people think swing trading is long-term trading, and it can be, but it doesn't necessarily have to be. So as a swing trader, what you're essentially trying to do is you're trying to catch the next swing of an up leg or the next swing down of a down leg, right? So in other words, it's trend trading. So you're just catching the next move up. As we know, well, as most of us know, the markets move in waves. And as a swing trader, you're basically looking to catch that next wave up. And if you kind of contrast that to, say, a fade trader, because it's important to understand what it's not. So a fade trader will be looking to catch a top for the move back down. A swing trader is looking to go with the trend. Okay, and obviously a range trader is when the market's going sideways. So now the thing with swing trading is that you can do it on multiple time frames. So if you think of it like this, you could be a swing trader on a 15-minute chart. The only kind of distinction that I would make is that if you're looking for, say, something that's more day trade, I would class myself as an intraday swing trader as opposed to an end of day swing trader. So that's kind of your distinction. There's like two groups. An end of day swing trader is basically somebody who, let's say they do their 9 to 5 or they run their business, they go home, they look at the markets for an hour, they go and see, right, okay, where are we within this cycle? And then you put an order in, you're trying to catch the next swing for the next few weeks, right? And you just hold the trade. Where somebody else who's like a day trader can be an intraday swing trader. So you go and look at the hourly time frame or the 15-minute time frame and you say, okay, the market's moving in waves. I need the market to come down so I can catch that next wave up. And that would be like an intraday swing trader.
Cool. So as a former hedge fund trader, you would be the latter then, right? You would be the intraday swing trader. I mean, was there any guys that were working at the hedge funds or professional traders on the trading floors? Do they kind of do longer term swing plays, or are they all looking for shorter term time swing trades?
Yeah, good question. So when you're generally working for a hedge fund, you're looking at shorter term trading. You're generally not holding overnight risk, and certainly not holding positions for weeks. That's kind of more in line with fund management. So fund managers will hold things for a lot longer than traders. But trading, like especially for a hedge fund, you're essentially looking to be in and out in the day. So we would be classed as intraday swing traders if that was your strategy. So everybody kind of specializes in something, and you can trade the same way as someone else, covering a different market. And it can be very powerful because you're going with the trend. And the good thing about doing intraday swing trading is that you only have to find the swing for the next few hours, as opposed to predicting where it's going to go for the next few weeks. And that's quite good. It makes it easier, but also it gets you the result quicker. And actually, if you this is another topic, but like if you think about compounding, that's quite important. When you're sitting in a trade for weeks, even if you're making money on that trade, there's an opportunity cost, right? Because your money's not being used elsewhere. So that's why you've got to kind of decide, what type of swing trader do you want to be, if that's your kind of bag. You got a little smirk on your face. God knows what's going through your head.
I have. I'm still getting some more abuse in the comment section, and they managed to make me break and make a smile.
You need to share it with the people watching this, Gavin. You don't need to keep it to yourself.
Must be so hard reading the comments. My comments, I'm presuming that's comments, and keeping a straight face. That's the one that ended up getting me. So well played, Con. We're trying to have a serious conversation here, but we are where we are. So we've ascertained swing trading, what it is. There's two different types. So there's the end of swing trader. If you've got a business or a day job and you want to come home and do some analysis on the markets for the next day, the next week, the next few weeks. And then there's the professional traders. They would class themselves as intraday swing traders. And that's what you used to do when you were working on the trading floors at the hedge fund, correct so far?
Yeah, that's right. I mean, when I was working and when I had a job in my early days as a trader, I used to do end of day swing trading, and I used to do it in stocks because stocks close at a certain time, right? So it was quite nice to be able to look at the charts knowing that the stock market was closed. Like I couldn't miss anything. There's no FOMOing in, right? Like you're just, whereas like sometimes with, with things, with markets that trade 24/7, you're doing your analysis, and by the time you finish your analysis, the market's already gone where you thought. Whereas with stocks at that time, it wasn't the case. But with FX, in general, if you're doing it at a certain time, when the market's quiet, so it's just about knowing your zones, your time zones. You can still do the analysis and still have suitable trades without the market running away. But yeah, that's kind of that's exactly correct though.
Cool. Okay, so we've worked that bit out. What are some of the best ways to trade it? And is there a difference if you're an end of day trader versus an intraday trader, or is it just the time frames? Everything stays the same, but the time frames change. Or is there totally different strategies for that?
Great question. So if you think of it like this, like if you want to be an end of day swing trader, your focus is going to be the weekly time frame and the daily time frame. You're going to be essentially looking for the big picture. Where is this likely to go over the next few weeks? And that's what you're trying to figure out. So you want to do the usual things like, assessing where the trend is, where you are relative to the trend lines. It's always advisable to put in some moving averages like your 50 and the 200 especially. And then you can kind of figure out, okay, this is where the market is going. Whereas with intraday swing trading, you're trying to figure out what it's going to do in the next few hours, but it's a little bit harder in some senses because you should look at the higher time frames. It's like an extra layer of work so that you're trading with the higher time frame. It's always an advantage because sometimes you might look at an hourly chart and it's trending down and the daily chart is trending up. So you can trade that swing down, but you're going against the tide. And, as a beginner especially, it kind of reduces your probability of winning. So in an ideal situation, you'd understand what the weekly is showing us, what the daily is showing us, and then you use like the 4 hour, the hour 15 to trade in that direction, just to improve your odds. Because there's certain things as a beginner trader that you won't be aware of, that you won't know. So you won't know how strong your setup is if you're going against the main time frame, like the higher time frame. So I always advise as a beginner trader, definitely look at the higher time frame and try and trade with it as opposed to against it. And then as you build your confidence up and you understand a little bit more about how things interconnect, you can start to do things counter trend as well. And counter trend, in my opinion, can be even more profitable than with the trend if you understand what you're doing.
Cool. So can you give us a breakdown on a chart of an example of a good swing trading strategy for if you're an end of day trader? So if someone's watching this, they've got a job or they're running a business, but they're interested in making some extra money from trading, what would be like a really good strategy that they could use to get going with swing trading?
Yep, sure. So the first thing that I'm going to say is when you're trading FX, so obviously it depends on the markets that you're trading, but when you're trading FX, a lot of the time, the markets on a higher time frame go sideways. So you have to sometimes, you have to look at the chart, and if you haven't got an obvious trend in the chart that you're looking, you can go down a time frame as well. So let's say you looked at the daily and the daily was just basically ranging, you might want to consider going down to a 4 hour time frame. And so that's the kind of first phase of identifying a potential swing setup, is like, what is the higher time frame doing? I can bring in. Would you like me to bring in my charts, or are we going to do that later on the setup, or do you want me to give you high level?
Yeah, because you gave give us a high level on the chart now, just of a few things that people can start to implement right now, so they can open up a chart after this and go and look at an actual trade. Because you did mention things that maybe some of it might have gone over people's heads, and the one that we're going to do a little bit later on, maybe you could do two. I don't know if that's possible in 15 minutes, but an end of day trade and an intraday trade as a professional trader. But in case you can't do that, let's just break down some of the components over the next few minutes to say, like what you were saying about the 200 EMA, the trend lines, and how to kind of put all that together as a broad kind of brush stroke to get started with swing trading.
Okay, let me just screen share. I'll just pick one at random that looks okay. So this one might be okay. We have the CAD yen. Let me just clean this up. So this is a daily chart. So I'm just going to zoom out. In fact, we can just go to the weekly time frame as well. So when you kind of look at this, this is what we have. We have until 2006. You can kind of see that the market is largely, largely kind of sideways, right? In many respects. So like, you might want to say like that this is kind of its boundary. It tends to spend, I can't see beyond 2006 on this chart. There might be more on trading view, but just to keep this example simple. But let's just keep this simple. And let's say you think, okay, well, we think we could go higher, right? Let's just say we think we could go higher towards this kind of upper boundary, let's say 100, right? So if we go to the daily chart and you go over here and we look at this as an uptrend, the first thing that I'd want to do is I'd want to put in my up trend line. So whatever direction you're looking at, you start right at the bottom of that trend. We'll draw them up. So that's kind of our first trend line. And then we have our second trend line there. And that kind of gives you a base to kind of work with. Now, I personally would always want to add the Fibonacci, because as part of a good swing trading strategy, you want to know where the Fibonacci swings are. So if I just bring this one up, you can kind of see here already that there's a potential swing trade in this form. So if I just show you high level, what I mean, just looking at the trends, trend lines, and then looking at where the Fibonacci is pointing to, you can kind of see we've just broken this high, and based on the pullback, which is basically here the red zone, right? Let's come back to its 38.2. We would expect that this market will complete its swing around here, and therefore what that means is that if this is like the extension, okay, and then we want a retracement, and then as a swing trader, you'd be looking to buy for the next extension up. Now, the market may not necessarily come back to this trend line, and that's why you want to kind of use more than just trend lines, because the market may not pull back all the way here, especially if it's quite quite a strong move. So what we can do is we can add in some moving averages, and we'll have a look to see if there's any kind of dynamic support. So I would be interested to add something like the exponential moving average, where is it? I use so many different softwares that I forget which is which. I think this is just a simple one, but that's fine. We can go with the simple. It's not going to make a big difference. So we'll go with a simple moving average, and I'm going to start with the 21. And I just want to quickly see. In fact, let me make this a different color, a little bit more like turquoise. We'll make that I'd just like to increase it a bit so I can see it a bit better. So let's have a look and see where the 21 is. Okay, so that's the 21 moving average right there. Now, if this market was to go up quite aggressively, what we would be looking for a swing trade could be a pullback to this moving average here, right? So it's not a perfect fit, but it's one of the most popular ones. And so you can see it's got some reactions on this, especially here at resistance recently. So you might say, okay, well, if this market goes up and it starts to come back down, you might say, well, look, there's a bit of old resistance. We've got the 21-day moving average. That looks like a good swing play to target, you know, up here, for example. So that could be a way that you do it. I'd also add in, say, like the 50 moving average to see where that kind of comes in. So if I just go here, let's have a little look. I keep it as a simple one because I did that for the first one. So there's your 50. So the 50 actually comes in at a similar point right now, unless I've just done that wrong. Yeah, so it's coming in at a similar point. If we make it exponential, it will just adjust slightly. You can see there. But you can see quite clearly there. This is actually one of the common ways of playing a swing trade is when there's a 21.50 cross, you can look for the pullback towards either the 21 or the 50 to buy towards the next swing up, which you can find using the Fibonacci. So I would be drawing my Fibonacci and then looking to find confluence there. Ideally, that would be at one of the Fibonacci ratios, and it's pulling back to one of the 21 or 50, and then we could target the next extension up to there. So that's kind of, you know, in a nutshell, that's a very sort of normal swing trading strategy. It takes time. You're going to have to wait for things. You know, you might look at a chart and you might think, oh, wow, it's in the extension phase, so there's no trade. I have to wait for a retracement so that I can catch the next extension, and that's essentially how you do a swing trading play on the higher time frames.
Awesome, cool. So if anybody's got any questions, just let us know. Michael's saying, would you use monthly TM first in all scenarios?
Good question. The monthly can be useful, but I just find that it's not necessary, and you don't have a lot of data. Like, especially for charts that you don't have a lot of data. I think the weekly is absolutely fine. And you're not going to do too much with a monthly chart. You know, especially you're not going to maybe it's okay for just high level support and resistance zones. But personally, I would stick with a weekly and upwards. Because remember, you've got also factor in your time. So if part of your process is I look at monthly charts, well, how many charts are you looking at? And that's eating up 3, 4, 5 minutes of your time every time. That maybe isn't actually adding to your bottom line. So in my opinion, I don't think you necessarily need to. I would just kind of stick with the weekly. And in sort of rare cases where you just want that extra confirmation, you can go to the monthly. So you don't have to make it as a standard as part of what you do.
Cool. Okay. Well, look, I think that covers that part for swing trading. Let's jump into the FX news of the week, and then from there we'll do a trade of the week from this data. So it'll be interesting to see. Obviously, the last couple of weeks. Just cutting up a little bit there, Kevin. There's probably some more thunder and lightning that's cracking on somewhere on the coastline. So don't worry about me. We'll let's just jump into the news, and I'll try and stop talking as much as I can tonight.
Okay, no worries. Okay, so let's have a little look and see what's coming out this week that could have an impact on the market. So, as mentioned last week, we did have CPI coming out on Sunday night for us in the UK. And it was a strong number, very, very strong number from New Zealand. You can see here we had a forecast of 1.3, previous of 1.3, a forecast of 1.5, and an actual number of 2.2, which is very, very bullish. When you see inflation go up that much, it means that the economy is thriving. That's what causes prices to go up. It means there's demand, there's confidence, and that's typically leads to a rally in the currency. And then what else have we got that's relevant to us? On Tuesday, we have the minutes coming out from Australia. So that could have an impact on the Australian dollar. We've got CPI coming out from the UK. So we'll see, you can see here, we're expecting a 3.2% CPI year on year. So we'll see what kind of happens there. And the month CPI is 0.2% on Canada. And there's no forecast there at the moment. But yes, again, so on Wednesday, expect volatility to kind of come in for sterling and for the Canadian dollar. And then on Thursday, we've got Governor Lowe speaking again. And then on Friday, we have a little bit of data, not really a lot. So I think Wednesday looks like one of the bigger days, and that's kind of like the main. And the monetary policy minutes can always be important to kind of give us indication of potential future rate movements. Friday, these kind of PMIs don't tend to have a lot of impact. So yeah, not a huge amount going, but it's like the third week of the month. It's pretty typical, but I think Wednesday could be an important one to see what happens there.
So with that data, do you think that would cable be something that you would look at this week, based on everything that you say about not wanting, how you look at the currency pairs and what you'd be looking for? Would cable be a setup? Would cable be a pair that you'd be looking to try and find a setup for this week?
Yeah, we had quite a strong movement last week as well. So, I mean, this, if you can kind of get into a position before Wednesday and then be in profit and then be able to lock it in, you can kind of catch a strong move. So I know cable rallied last week and towards the end of the week. So we'll kind of see what happens. But yeah, we can definitely look at cable to see where it's going to go next. But yeah, absolutely. Whether there's a swing trading setup, I'd have to have a look. But there normally is, depending on time frames.
And how would the euro US? Cool. How would the euro dollar, euro USD fare up, just based on this data that you're looking at for the high event news this week?
Well, based on the news, that there doesn't seem to be a lot of high impact news. That doesn't mean it's not going to move. I'm in position on the euro dollar, which I added last week. So yeah, I mean, the new, this is kind of the based on the scheduled news, there's nothing really there that's going to move the euro dollar, but that doesn't mean it's not going to move. Sometimes things happen unexpectedly. So although the news is important, you have to also analyze the chart for the chart. So which is what I normally do. This just kind of gives you a good glance overview of where volatility is expected. So but if you're looking for instant volatility, then you'll kind of want to go with something like GBP or CAD and the Australian dollar probably. So Aussie dollar cable will probably likely see volatility this week.
Cool. So let's see what we can do. Let's see what we can find on cable, because I know there's quite a lot of people that have been interested in and looking for more information on cable. So
yeah, absolutely. We can. We'll bring cable in. Let me see if I can. I've got cable here. Well, I'll just set it up again. That's fine. We'll just set cable up. Fine. Okay. So let's have a quick look to see what cable is doing and what setup we've got potentially here for this one. So I'll start with the weekly time frame, so we can kind of just get a good feel for where we are within that cycle. And since we're talking about swing trading, I'm going to kind of have that in my mind to kind of give you the examples based around that idea. So when we're looking at this, and if I just kind of go out again on the weekly, we'll just take, we'll just do a kind of rough and ready approach. You can kind of see that, this is where it's spending some time at the moment. If you're looking at this also from a historical point of view, it's at one of the lowest points it's been, since 1998. So we went as low as here. It's obviously had a rally now, but the potential is that we go back towards these highs at some point. So if we're looking at this on a weekly time frame, and we zoom in, when you're looking at swings, essentially what you're looking for is, if you see that's a swing, that's a retracement, that's a swing, that's a retracement, that's a swing, that's a retracement. So now as a swing trader, you're now looking for the next opportunity to take that swing up, okay? So that's kind of how it works. If we just remove that, and and that could be a pattern breakout, it can be a trend line breakout, it can be various number of things. So if we kind of zoom in over here, so I'm just going to spend a little bit more time than I normally would on the weekly time frame and the swing trading idea. So if you have a look there, you've kind of got your resistance line, which is where we are. And there's different ways we can connect this. Like some people will say, okay, yeah, you can make this into a channel, which you can. Otherwise, we'll see this as a, as this kind of triangle there. This is the subjective part. Okay, this is the subjective part, and whatever you can see there, it's neither right or wrong, because at this point we don't. We both are valid, right? You can see there a potential triangle, you can see there a potential channel. I guess the most important thing is that you're looking for, at some point, for this market to break and then go towards these highs. Now, one of the common ways of playing swings is to look at that. This is the safe way of playing it, I guess. Is to kind of look at the way the market is moving. So you have a high point, a low point, a high point. That one's kind of like an equal point, and then you've got another low. The most important thing here is, if you kind of take these high points, these high points are getting lower, right? So that's basically showing us that the market isn't yet ready to go up. So as a confirmation, what you want to see, so people that want to trade with swing trading but don't want to just jump in, what you can do is you can wait for the high to be taken out, so that you have a higher high. And so you would say that's a swing, and then you get a retracement, and then you would then play that swing there, because you've confirmed that this structure is now broken, these lower highs are now broken, so then you can kind of get in. And if you were going to trade that way, you can also go to the lower time frames. So if I just zoom out. So if this market was to break here, now you might say, well, great, I want to, now this high has been taken out, I want to wait for a retracement and then I want to go up here. However, what happens sometimes is like, you know, this pattern breaks, and I'm sure you guys can relate to this. It breaks and you're like, yeah, I'm going to be a nice, you know, a good trader. I'm going to wait for my plan. I'm going to wait for this to come back here and then I'm going to buy it for the perfect trade. And it never comes back, right? And it goes all the way up to where your target was and you're not in it. And I'm sure most people can relate to that. I know I certainly can relate to that. So what you can do is in this phase here, once you've got that confirmation that the swing trade is up, you could then go to the lower time frame and trade the mini swings, like on a 15-minute chart or an hourly time frame in this phase here. And so that way you're like, okay, I'll take that trade, I'll take my profit. Retracement, I'll take that trade, I'll take my profit. Take that trade, I'll take my profit. And so even if you got stopped out, because let's say you catch 2 or 3 winners and you're here, and then the market does come back, well, you know, at least it's only one trade, and you may have even caught 1 or 2 winners as well. So, and you don't miss the trade. So that's kind of like an in-between. So with that all being said, so this is kind of like your weekly time frame. Let me see if we go over to the daily time frame, it just makes it a little bit easier to see. So again, you can kind of see this market is retracing right now. It's in retracement mode, and you need a break for you to confirm that swing up. Now, what some people do, the people that are a bit more confident, that are brave, they will buy at the bottom here. Okay, so they'll buy at the bottom here, looking for that next swing up. But it is risky because you've got no confirmation if you don't understand. So like, let's say you bought here, you'd be like, great, but how do you know it's not going to do that? And that's where, you know, having a bit more knowledge really helps. So let me see what we can do here in terms of cable. So one of the first things I'm going to do is I'm going to put in my up Fibonacci so I can understand where the swing comes in. Now, that's pretty great because for those that have studied the way that we trade, they'll understand that the market has a 90% chance that it's going to go back to at least its first Fibonacci target, which is the 38.2. So when you're here, you don't really want to be buying it in this zone, right? Because that's called our fade zone. What you want to wait for is at least a pullback to the 38.2. Now, what's really great about what we see here is that we've done that. So that could have been a buy for somebody, and it's also matching there with an old resistance. So if somebody wanted to jump in front of the train going down for the potential swing up to here, that would have been a nice entry, okay? For those that are a bit more risk averse, you're now saying, well, at least we've come back at least to there. I'm going to wait for that pullback. I'm going to wait for that high to be taken out, and then I'm either going to get the pullback there, or I'm going to trade the lower time frames up. Now, I can do one more thing here, which is to see where the down fibs are. And that was, if I just zoom in, so we've just completed the D. We had an A, B, C, D. That was the projection. We went to the overextension near the purple line, and then we basically jumped up. So, you know, this probably here would have been a decent buy zone with a stop here, and you'd still be alive there. So now you kind of have to wait. So the way that you'd want to consider doing this would be something like this. You could do a manual fib from there to there. Hold on. Why is it not selecting? Let's take the ray off. A, B, C, D, A, B, C, D. So the D is just completing now. So we're expecting a pullback soon on cable, and then you could wait to buy that. But personally, I don't recommend that unless you're going to get a pullback here. So if you're going to buy this, in my opinion, I would be waiting for maybe like a double bottom here if you want to buy. Otherwise, the safe way of doing it, as I said before, is let this channel break and then either wait for that pullback there or go to the lower time frame and trade it up there. That's kind of really the only way of playing this right now. You're at the upper part of the channel, you're at resistance. It doesn't make any probability sense to get in here. Here, yes, it makes sense. You're going in front of the train, but at least you have the potential upside. Here, you're basically buying straight into resistance. So my preference would be for you guys would be to let this market break this channel, ideally take out the high, and then get it on the pullback or go to the hourly time frame, which at the moment isn't going to be too valid. So this is the hourly time frame. One thing you can do to prepare as well is when you're looking at the hourly time frame, if you prefer to catch the swings here, like on the lower time frames, you can also add in your moving averages on this time frame. So let's just add in one just as an example. So that's your, let's change that to 50 and make it a bit thicker. So that's the 50 moving average. You can see the market's there right now. And then because I would also add in the 21 and I'd also add in the 200. And you can use those as a point of support to buy in that direction. But like I said, personally, I wouldn't want to be getting in just before this resistance, although there might be a little bit of room for one swing up. So if you wanted to do an intraday swing, you could look at this here as a 50 moving average to try and catch it towards that channel there. And if that's the way you want to trade it, what you can do is you can also add in the fibs going up to see where we are on those swings. And that's perfect. That's exactly what you want to see, guys. So you can see there, the hourly time frame is predicting. So for those that don't understand this, it's predicting that the Fibonacci is going to complete its sequence right there on the trend line around 138.33. So if you can find a nice entry in this zone here, and it makes sense from a sort of reward to risk point of view, you can try and catch that swing up there. Alternatively, as we said, you can just draw like little mini channels here, and the setup could be for you, right? This is like the more conservative one. It breaks, you buy it, or you wait for a pullback, you buy it, stop below the channel, and then you target that next swing up. Okay, so there's a few different options there. Hopefully that's given you some insights.
Awesome. Thanks a lot, mate, for breaking that down and looking at it from a point of view of a swing trade. Guys, if there's a lot of you that are watching this, firstly, I'm never normally this red. I'm sunburnt, but by next week, it will have turned into a nice base tan. I've been getting a lot of abuse on the live show. So if you're just tuning in on the replay, feel free to give me some stick as well and put a comment in there. Best comment will win a prize. But seriously, in all seriousness, if you are new to the group or you're new to trading and you want to get some more extended training from Andy, I'm going to put a link in the comment section where you can click on to get more information and more training in a masterclass, if you will, a Mr. Demi masterclass. So I'll put the link in that in the comments after the show. You can click on that in your own time and go and watch that masterclass and get some more extended training from there. One thing that I wanted to say that you would have used if you were going to jump into this as an intraday trader to look at an entry point would have been the DTR, right?
Yeah, the DTR definitely is something that I would use to time my entry. So like if I wanted to buy it before the breakout, I would use the daily trading range, the indicator that we have, and that would give me precision of where the likely low is of the day. So it doesn't mean that it's going to do what you think, but it just gives you a little bit of room to breathe. Because if you're like say 80-90% of the time buying the low of the day, which is what the indicator will help you do, then you have, by just going straight into profit, it gives you that extra bit of room to breathe, I guess, to see what the market's going to do. So yes,
Awesome.
Good point. I would definitely use that.
Thanks for clarifying that, because it's just obviously watching you week on week, and I'm sure some guys in the group that have gone through the training already, they'd be like, yeah, that's where you bring in the DTR. So unless we've got any other questions, we're going to end the FX show here. Con, you're only allowed 3, mate. That's your third strike. You're out of here. Dude. Is this the live show? Rah. Fair enough. You won't be laughing next week when I have a nice 10, my friend. It's getting ready for the summer. So tomorrow we're going to be back. All things Gavlob. That's not bad. That's quite a good one, Nick. Thanks a lot for tuning in live on YouTube. What I'm trying to say, to be serious, for people that are new here to the group, hopefully you've got a ton of value from us here. Thank you very much for your time. We're going to be back talking about cryptos tomorrow. So from midday BST, check your local listings, and we're going to be breaking down the whole circus that has been cryptos. It's been another interesting week. And if you're not sure whether you want to get in on cryptos or whether you want to get in on FX, maybe you might want to get on both. Make sure to tune into the live show tomorrow called Crypto Like a Pro with our resident professional trader, Mr. Andy Demi. Can you give us a snippet on what your views on this coming week for cryptos is going to be?
Yeah, I think one of the things we're going to speak about tomorrow is the Bitcoin ETF that everyone's speaking about. So I definitely want to bring that up tomorrow because I think the people have got a bit confused about what an ETF is, what it's going to do for the market, how it's going to impact institutions. And so that's going to be a big driver for what happens going forward for the next few weeks, potentially. So we're going to bring that up, and then we'll discuss, at the moment, what Bitcoin is doing relative to the altcoins and how the altcoins might move over the coming weeks to catch up. So yeah, lots to cover tomorrow, and lots going on, lots of opportunities. So definitely tune in, guys.
Maybe another little altcoin breakdown as well to help us get in on the 10x action, the Andy Demi 10x action.
Yeah, absolutely. We can bring a new coin in, maybe something we've never covered before.
Awesome. So if you're interested in cryptos, make sure to check out the show tomorrow. Thank you very much for tuning in. We are going to bounce, my friends. So we will see you tomorrow. Cheers, guys.
Take care, guys.